All right, so I can go ahead and kick it off. Thanks everyone for joining. Today is August 23rd. And look, there hasn't been too much going on between the last 2 weeks. We've got, BTC had a little bit of a vol move. It's currently sitting around 43, so it's like 7.5% change from last week. We got ETH devol at 39, and I guess the only real interesting point that's kind of in the near term is a Jackson Hole speech by our buddy Jerome on Friday morning. But other than that, thanks everyone for coming. Today our guest is Alex. A macro, macro beast that I forget what we said on the tweet the other day. Go ahead and give it like a brief introduction, and then I'll hand it off to you and Marty to continue.
Yeah, thank you. Hi, everyone. I'm Alex, and what can I say about myself? I'm a crypto trader, an advisory firm, and I've been trading for over 2 decades, and have a background in traditional finance and commodities, and I'm an economist by both education and former job experience. That's about it.
Nice. And I'm Marty, the in-house options vaulter at Premia. I host the spaces every 2 weeks, and I do some back-end writing for the educational stuff that they're doing. Professionally, we run a short crypto vol fund that we had to wind down with a good bet with our friend Tolga, and it actually was perfect timing because that exact day was the bottom. Yeah, thanks, Alex, for coming on. DK, you want to give an intro, Tolga, real fast, and we'll get into it?
Sure, I'll go first. My name is DK. I cover operations and legal over at Premia, but I've done a lot of things in the past. I was over at Bulge Bracket Bank on the broker-dealer side for 10 years before coming over to DeFi full-time. So I spent a lot of time, mostly on the traditional security side, but did a little bit of time in the listed derivative space. But nonetheless, happy to be here. Tolga, on to you.
Yeah, my name's Tolga. I'm in the research department over at Premia. So I do everything options related, designing, coding, and working on our product pipeline. My background is in traditional finance, spent about 15 years doing that. Journeyed across equities, equity options, index futures, volatility futures, and made my way over to crypto about 3 years ago full-time.
Amazing. Now that we got the intros through, Alex, how are you?
Good market.
Tell us a little about what's going on. What is everybody expecting? What should we expect this week from the?
Well, it's as been usual in 2023. Almost everyone seems to be scared for the wrong reasons, like basically blowing things out of proportion. This is my read on the market. We just had a week of risk off on traditional, on basically equities and bonds, mainly equities, driven by the way to put it is fears on the supply side of U.S. Treasuries. Related to that, talks of terminal rates going higher and basically the deflationary China spiral, and about the impending collapse of China. I've heard that story so many times, just as I've heard the story of how the dollar is going to cease to be a reserve asset so many times, and it's kind of like getting recycled. But that's what's going on. Basically, we had a 1 week correction, and now we have a little bit of some profit taking and reversal in ahead of Jackson Hole. It's a pity because if the market would have gone without the last 2 days into Jackson Hole, was for short-term traders a very easy long. Now, not as much. We have Jackson Hole, which is basically really important on Friday. Jackson Hole is a 2-day symposium, 3-day actually, that takes place every year, and it's kind of like the one event outside FOMCs where the Fed, via Powell, can have a large impact on the market. Traditionally, Jackson Hole actually is interestingly contrary to current popular belief, is not really a market mover. In fact, historically, Jackson Hole is only mattered 3 times. I think the first was like 97 or 98. The second one time was actually twice, and the second time was last year. So last year, Powell literally, as we all know here, crushed all markets on Jackson Hole. He literally backstepped and took back everything he had said on the prior FOMC. So as risk assets were flying, and Powell just came in and said, you got it all wrong, there is no cuts coming, and everything collapsed. So I think at present, the market suffers from some sort of PTSD around Jackson Hole, and is on one hand not as important as we think. Secondly, is tied to something I've been saying all of this year, which is because the Fed is almost done, the Fed is not as important as it's been before, same as with inflation. And final thing there to add is this is very important, is what's been driving the market last week is fixed income US markets, the long end, basically, especially the 30-year with yields going through the roof, and a lot of panic there. There was what triggered that was a very viral post by Ackman, which was fascinating because it literally made the 30-year trade like a shit coin. I mean, seeing the 30-year bond being moved by a post on Twitter was absolutely wild. My view on that is that it's a very easy, very catchy narrative that everybody loves, and it's a very easy trade to put on. It's like if it's presented in a certain way, it feels unavoidable. And I take the other side of the trade. I think that's counter trend, that is short trend, and given that the Fed is almost done, and the deflationary process that we are going through right now is not short term, that basically long yields will also come lower. That's about it.
Sure. So for this Jackson Hole, do you think it's a nothing burger, or do you think that it's going to be the crusher of all markets like you did last year, or do you think we're up only? I mean, we just had
it's not really.
It's up 10% already.
I mean, it's not that straightforward. It's not really. I mean, up only. It's hard up only in this market, right? There's a lot of noise, and I mean, I on one hand I kind of like laugh on the noise, but it's not minor. I mean, there is valid reason to be concerned slightly. So I think it's most likely. Where's the risk? The risk is that he addresses the long end, and he addresses that the Fed still sees a low terminal rate as a dominant base case scenario, and basically yields on the long end, eventually yields coming down, and basically makes a lot of people unwind that trade. And that, if that happens, that would be very bullish for all markets. On this is a crypto pod, so the risk with crypto here is that crypto has been really doing mostly its own thing, and it's been a tough market because, I mean, we literally had 15 days of prices going up, and the entire rest of the year has been either drips lower or what just happened on Thursday last week, right? So the risk is that basically crypto may continue not responding to risk assets.
Yeah, I mean, when we look at Bitcoin and ETH, we're 50 to 60% up already year to date. It looks like we crypto folk caught the move at the beginning of the year while equities were slumping and everybody's like, oh, crypto's a new frontier, we're back. And then, I mean, we're short volatility, or have been short volatility, probably the most active and most vocal about that here on the Twitter, or on the X.com, I should say.
Yeah, congrats.
And it's just been a rough, Too bad I don't have $1 billion to play with. Then there would be a totally different story.
Then you would
But
crash the market. No,
yeah,
thank you.
exactly. Yeah. Yeah, it would be a different game for sure, and maybe you couldn't even get off that size of liquidity. But being the short vol trader for the whole year, pretty much, it's been very interesting. Like we've had every news you could possibly imagine. You've had the XRP, you've had the BlackRocks, you've had the futures ETF get approved, you have future spot ETFs coming, and it just seems that it doesn't care, right? You can get at the money IV all the way out to June under 50 handle right now. It's like that's so unlike crypto, right? We all came to crypto to trade high volatility products and turn $1 into $100 million. How are you looking at crypto in the next, I don't know, let's say end of year into the halving? Are you looking at people front running the halving? Are you looking at we're uncorrelated from traditional markets, or you don't have an opinion?
I'm looking at something like 30K within a year. Exactly how that happens at secondary. I'm on one hand very bullish. On the other hand, I'm concerned about the lack of interest most of the time. So, for example, I mean, right now, short term, by the way, what that translates into is basically carrying a relatively large long position and trading around that. Short term, I'm literally looking for basically mid 27s. So it's basically using different time frames to approach the market. And if price goes back down, say we go now to mid 27 and we go back down to low 26 or upper 25s, I think quite likely if that happens, we puke, unfortunately. That's a trade.
It would be the perfect time for the BlackRock ETF to be approved, right as everything's puking, right as the bottom, and they could slurp it all up. That's kind of been in the back of my mind. Like, if they were to be approved, it would be at the perfect time of the whole crypto market collapsing. I think you see a lot of, I love selling doomsday puts and moonboy calls. It's one of my favorite things to sell to people. And it's just like every day, of course, you can't listen to the crypto Twitter noise. You have to make your own opinion. Meme lines only go so far. And, you have to make your own opinion and put your own money on the line instead of, hopefully you're not copy trading somebody, right? Just seems like, oh, you're either 10K or 40K or 10K or 40, 15K, 40K. Nobody really expected us to chop, since March, we're at the same price. We're at 26K, I guess, right? And we went up to 30, we're back at 25, back to 30, 25. We've just been chopping a $5,000 range for a few months now, all while volatility is just absolutely into the gutter. And volatility, I thought, was going to go lower, but I did not think that it would be going this low. I didn't think we would see realized vols in the 20s, and I didn't think we would see IVs at the money, printing. Let's just take devol. I didn't think we would see devol at the 30 handle. That was just like not in my playbook. How are you looking at crypto volatility? I know you're more of a macro guy, but how are you looking at crypto volatility and trading that volatility?
I'm not trading volatility. It's all I've done is I put a few call spreads that actually went. So you took my money, literally. That being said, but I don't have a view on volatility aside of the fact that I know for a fact that at some point there's going to be a regime change, and it's going to go back up to 100, and it's going to happen within like 3 days, because that's how crypto works. What?
Yeah, we say.
Yeah.
Go ahead. Go ahead.
I mean, the question is what the trigger is. I don't know exactly what the trigger is. Sometimes we don't even need a trigger.
I think that lends itself to the narrative conversation. You said something earlier that really resonated, which you talked about the 30-year. And you kind of reflected on how, the movement in the 30-year was pretty much just narrative driven, right? And we're talking billions of dollars that are moving just off of a narrative. Um, would you say that, like with crypto, which is also kind of a narrative driven product, that the catalyst then just comes from a source of a narrative, right? Something that can people can hold on to, that isn't just a single blip of news, but something that has more of a longer term narrative to it that can continue to reverberate through the ecosystem. Like, this is continuing to happen, this is going to happen, and then essentially it's just this like self-fulfilling, reflexive process, that sort of just comes out of nowhere, right? It's not even a catalyst per se, it's just this self-created catalyst of just, this is going to be, if the US dollar is narrative driven, it lends legitimacy to crypto automatically, because crypto, does it need fundamentals? Well, I mean, you're basically saying the dollar doesn't need fundamentals. It can basically run off of narrative, and that's fine, right? And people still trust the dollar with narrative.
I would disagree there. I don't think the dollar goes in narratives. It's too large, too liquid. It's mostly trade differentials and a little bit of risk off, risk on. I mean, the 30 year.
Yeah.
Well, I wouldn't. I just wanted to clarify that I wouldn't call the 30-year the dollar.
Okay.
Onto the narrative thing, it's kind of, it's fascinating how, I mean, some narratives are designed and are actually crafted. Most narratives just happen organically. Some can be. I mean, if you think about it, it's very powerful how some people in the space have the ability to move the market with a post. Like, for example, Arthur Hayes, if he puts a very viral post, he can move Bitcoin with just a medium post 5% within 48 hours. I think the next narrative is the ETF. I mean, it's gonna pick back up. It's kind of like inevitable. It may be rejected after all. I mean, I'm if I have to guess, because it's a guess after all, I would put the odds somewhere around 60-40 for approval, based on unfortunately, just the name, the BlackRock name behind it. Because if you think about it, the application is identical to applications from years past. Nothing has changed on that side. But BlackRock is not Van Eck. It has a little bit more sway. Also, something else is like those guys, they've been working on the Bitcoin ETF for, I mean, as far as I know, that application was ready a year ago. Why would they put it out back in June? What changed? Something has to have changed. I don't know.
No, for there, it's like, why would BlackRock, I guess the question, we could sit here all day, but why would BlackRock even try to get an ETF approved if they didn't know that at some point it was going to be approved? And of course, they want to be the first one, right? If it's the SEC that rejects it and then they have to come back and reapply, well, at least the SEC said something, right? At least they told them this is not approved because XYZ. I'm sure you could have like a grayscale thing, just like a no, just like nothing happened, we're just going to postpone it. But I think they want to be on the forefront, and I think they want to be the first ones, and they see an opportunity to make money, and that's the only reason that they're there, right? They wouldn't be there unless there was an incentive.
I mean, you could theorize that an ETF in this market is quite likely a winner takes all, where basically there's one product that dominates over 90% of flows. So the question for them and the BlackRocks of the world is how to become that one guy that's going to be printing all that money.
Sure. Yeah, and let's say a spot ETF gets approved. What kind of flows are we seeing after that, right? Because a spot ETF is very different from a futures ETF in terms that the spot ETF can actually I don't know, quote, move the markets, right? That physical coins have to be moved instead of a cash settled future. But what kind of inflows do you think we're going to see, if you have any opinion?
Well, can't really estimate it. Can, but any estimate is just basically an academic mental jerk off, to put it in a way. Because, I mean, we can go and look back what happened with the gold ETF in what was it, 04? I forgot exactly when it was. So what happened when the flow started kicking in? But there's nothing that says that what happened with gold is what should happen with Bitcoin. There's something else also there. Is the question is, are asset managers and banks going to start recommending to their clients to put on Bitcoin positions, which is what happened with gold? It's going to be slower than that. On the other hand, the Bitcoin market is so liquid, and we are so fast to act on any news that the way I would think this would happen is we, meaning those who are in the market now, we would rush and we would just send it flying very, very fast. So we pump and dump it. It's us. It's hot money flows. On the futures, I mean, that is a shit product because of contango. So it's pretty hard to recommend. Basically anybody who puts on a Bitcoin futures ETF on their portfolio, they have on top of the fees, they have a negative carry that can go from 3 basis points to in normal markets without even too much bullishness to 12 basis points. Sorry, to 12%.
Yeah, I mean, the banks aren't gonna sell their customers a product unless they can make money, right? So if there's not an incentive for the bankers to push the narrative and push the product, then they're never gonna touch it. They're never gonna sell it, right? I think I'm in this boat where I don't think that we see a spot ETF approved unless the US has some clear-cut guidance and regulation on what crypto is and what is not a security. And then also, how do the banks make money and how does that structure look? And that would be like our pushing guide, or else, like you said, it's just going to be us. It's going to be the crypto native folk pumping the price, pushing the price. It's not going to be like this mass institutional inflow that everybody's hoping. You're just not going to get it unless there's a product for a bank to make money and to sell to retail.
I think we can push price. I think we can push price to the upper 30s without new money. Beyond that, not.
But without new money, you're essentially saying people would just leverage, right?
Not leverage. I mean, people sitting on tables, cash.
Okay. Yeah. I don't see any scenario in which any reaction to the news is actual fundamental movement of the ETF. The ETF would end up being very, very slow in integration, right? Especially from a spot standpoint. I don't think someone like Larry Fink is going to look for, $10 billion of Bitcoin to fund, the ETF. It's likely going to be a gradual process and integrated gradually within their portfolios. So any reaction on the front end of this is all going to be just more speculative driven. And then the fundamental side of the purchasing would take time, right? The acquiring this into portfolios takes time. I don't think everyone just all of a sudden wakes up the next day and adds a 2% allocation to their portfolios. That just seems a little odd.
Let's play devil's advocate. It's a matter of game theory. If you are BlackRock, you've already had the time to think it through. And you know that if you move first and you move if you move very fast, very aggressively, the odds of you becoming the one that takes over 90% of the market grow exponentially. So you could see exactly the opposite scenario happening when, as soon as it's approved, they start pushing it really, really, really hard. That being said, I don't think we will see much flows regardless at the beginning. So the pattern is clear. It's on approval, we fly, and then on listing we dump. So we repeat the same pattern, right?
Larry's already pushing it hard. I have a question for you about Larry's Fink narrative. I would say probably for a better part of the last 2 years, he has been he's downplayed crypto. He has a lot of his conversations don't even show that he even understood it. This happened for a very long period of time. And then all of a sudden, the moment they have this application, he starts going on some, PR blitz of kind of advocating for Bitcoin. Why do you think all of a sudden there's this like shift? And why do you think he just sort of did this about face, which sort of gives him like a credibility issue? Because it just kind of shows that he's just playing to the ETF that they're creating.
Yeah, it's what we were saying before. It's a bet on taking that market. It's I mean, who's going to drive those flows? Those flows are going to be driven by recommendations. They're going to be driven by public narrative and by, I mean, in a way, people laugh about crypto Twitter, but crypto Twitter basically feeds the media and creates the narratives on crypto. It's 90% of the narratives come from there. So narratives drive media, drive clicks, drive buyers. So could theorize, and I would theorize, I would say this is what's happening, is that he's trying to get ahead of it. Somebody convinced him that there is a very decent probability that in 15 years, this is a long-term play, that in 15 years is going to be a massive market. And therefore, probabilistically, it makes sense to basically try to go after it, even though right now it's kind of dead, because it is. And it's ironic because it's, we're still up, what is it, 60%?
Roughly 60
Yep.
year to date.
Yep.
Yes, he's also mentioned that he will never be the leader of anything, that BlackRock will always follow. This is a very, something that's always stuck out to me. They aren't people who like to be on the cutting edge of anything. They like to sort of stick to tried and true blue chip processes. So do you think that narrative then kind of goes in the face of this positioning, because then they're trying to be the leader of this this ETF drive? Right?
Winner takes all. Yeah, one guy is going to take over the market.
So you think it's just essentially like a slow play of their hand, right?
Yeah, I do.
Yeah, get the lay of the land, see what's happening, and then sort of just come in right at the end once they know who the other players are and who the competition is. Yeah.
Winner takes all. Once there's a product to sell, then all the bankers will sell it. I guess I have a more personal question for you, Alex. Instead of like a whole macro landscape where we're going, what are your personal views? Are you a Bitcoin maxi or are you a crypto maxi?
I'm a libertarian. That's what I am. Extreme hardcore libertarian.
And you're from Argentina as well, so is that where it stems from?
I guess it comes from there. When you grew up in Argentina, you grew up in a system that is rotten to the core. So
yeah, I was there for a month and I saw the currency double, right? The cash rate different from the credit card rate, and various credit cards have different exchange rates, and various cash currencies have different exchange rates. It was very interesting, right? Because I'm down here in Brazil, and sure, we have a history of high inflation and weird interest rates, but nothing compared to the severity of Argentina.
Yeah, because Brazil hasn't abused this monetary policy in the last 20 years the way Argentina has. That it really it all boils down to that. That's the main difference. I mean, Brazil, it's ironical, it's still on relative terms a poorer country than Argentina, but it's catching up.
Yeah, BRICS is deemed to take over. That's what I'm told. If all else fails, I'll be in Brazil at the beach drinking cocos, and you guys can, figure this one out. You guys can fight that war.
Yeah, I want to say on the questions, I want to add something on Bitcoin maximalism. I mean, it's on one hand it's admirable. It's a beautiful way to look at life, and if life would be simple, it would make sense. But what they're trying to do, what they ambition as basically Bitcoin replacing the various currencies around the world, it's never going to happen. It's unrealistic, because monetary policy is an extremely valuable tool. It's a weapon, and no smart country that is in control of itself would give up that weapon. It's basically all the incentives are there for Bitcoin to never be adopted outside of a few very small countries. If we ever get there, once volatility drops to levels where you guys are billionaires.
Yeah, I'll wait to see that day. Marty a billionaire. I couldn't imagine the memes at that point. Yeah, I don't know if Twitter could handle that one for sure. Tolga, you have any questions before we move on? DK, any questions for Alex?
No, I'm good.
Negative.
Negative.
Keep chugging on.
Let him cook.
Let him cook. Alex might be one of the best guests. You just let it go, let it rip. I guess I just have more to dive in on what you trade, how you like to trade. I know you are just doing a little call spreads on Bitcoin, and you have let's say this 15-year plan that Bitcoin grows over time. What are you trading mostly, and how do you trade it, Alex?
Mostly crypto, mostly what I call positional trading. So went from basically being extremely short-term trader to someone who basically holds and trades around positions. My goal is to hold as long as possible until something very fucked up happens and I puke everything and then I start again. Example is last Thursday. Last Thursday, I literally puked absolutely everything I had, and I started again. I think by the way, it's an approach I would recommend to everyone to stop trading short term. And when it comes to options, I have to say, I never got deep into options in crypto because they're expensive. I mean, right now, Deribit is charging three basis points. But in general, fees on options, there's two things that happens on options in crypto. One is the market is small, two is expensive, and three takes a lot of time. I mean, options take considerably more time and effort if to do it well than simple spot and perps. And fourth is basically the volatility that you get. I mean, we already have, right now it's on the 40s, but this is a 60 to 80 vol asset in general. And then you go out the risk curve and you go to all the shit coins, and we're talking 200, 300 vol. So it's very easy to get higher beta and basically get a lot of punch for on various trades. Altcoins, I trade altcoins basically based on narratives, very short term. Looking for, in this market at least, looking to 10 to 40% moves and get the fuck out.
And are you doing these with high leverage, or are you just
almost
a spot accumulator?
No, it's almost no leverage. It's levered on a book basis up to 150%. Always look at book leverage. I don't look at position. Positional leverage is mostly, I mean, it's just where your stops are, right? How much money you have at risk. So
we did some we did some random back testing that was on BitMEX over the years. The most liquidations actually happened at the 3x level, right? You were better off using 1 to 2x than you were 3x if you were trying to do these longer swing trades. This was some previous data that we worked on, the BitMEX data. In terms of altcoin options, I got quoted some Matic. Some Maker options, and it was 150 vols, and it was 2 months out or something. And at the end of the day, I should have taken the trade because it ended up the buybacks on that coin and the founder narrative. And yeah, it did pop, but that would have been like one of my only directional trades in a very long time. We used to do more directional stuff on FTX, and then we did some market making on the US side for the spot markets on there on the US side. But options in the crypto space are still very new. I'm seeing a lot of players come from TradFi. I'm not sure if it's because the salaries pay higher, right? I had a buddy come from Microsoft AI team who was making, I don't know, 100 something, 150K or something, and one of the exchanges hired him for $1 million. He's like, "Oh, of course I'll take the $1 million and I'll go move beachfront and live 100 or live 10x better, right?" I'm not sure if it's the salary that's bringing these people, or I am also seeing I don't know, big brain chads, whatever the crypto Twitter lingo is, smart players coming into the crypto vol space because they want to, right? It's a very high leverage product and they can make more money than they can TradFi, right? They're not dealing with as big of a book, but there's a lot of more fun, interesting plays to trade instead of just sitting at a trading desk or something like this. We went to the Itaú trading desk last week and it was just like you have like 9 screens or something, right? These guys have like 9 screens, a Herman Miller chair, and lunch is delivered to them, and like that's life, office, city life, and I feel like you get a little more freedom in the crypto space than this traditional TradFi.
Well, it makes sense. I mean, the life on the trading side, and especially the sell side, is a horrible lifestyle. And beyond that, everybody's getting fired, or like, yeah, it's a dying industry.
So you think crypto's here to stay, and it's the newfound frontier, and we should just be balls long?
Not at all.
To say?
No. Why? No.
I don't know. You were saying 15 years, BlackRock's here.
It's just another asset class.
Playing
It's
this.
a good asset class. It's our asset class. It's a very insider-driven asset class where basically, if you have inside information, it's more easy to, like, let's put it this way: Bitcoin is not a security, will never be a security, and you can have information that moves the market. So it's a boys' club in a way. It's like trading penny stocks or being balls deep in some credit market in emerging market credit. I mean, once you're an expert in the market, it pays off to stay there, and it's a very attractive market. On top of that, it's a viral market because even if it's going up or down, people are. I mean, right now it's a matter. I think it's mostly a matter of on ramps that this Binance witch hunt and basically all the attack, the Operation Choke Point 2.0 that I think it exists. So basically, money stopped flowing in, but it's likely temporary. If we zoom out and look bigger picture, what happens with Bitcoin and crypto is that everybody has an opinion, and those who don't soon will. Can't help it. People don't give a shit about basically South African rands or what's happening with coal. A few guys care about uranium, but like all of these things, people pays attention, then forgets. Crypto somehow it's viral. So yeah, it's here to stay.
Yeah, as soon as the news channels start talking about crypto, it's either really good or really bad. It's time it's the top is very close or the bottom's in, right? There's no real middle when the mainstream media, especially in the US, starts picking it up, especially a CNBC or a Bloomberg TV or something like this. In terms of the future of crypto on-ramps, I wanted to touch that a little bit. I know the U.S. is the biggest, financial player in the world, and they have Operation Choke Point. I don't know. They're probably going to have 5.0 here pretty soon. do you see any other country picking up those flows? I'm seeing a lot of offshore banks picking up customers, but of course, you can't be a U.S. citizen or a resident. You have to be totally offshore if it's Bahamas or if it's Switzerland or equivalent. Are you seeing a country pick up
No, I'm not.
this?
Unfortunately, that's
You,
what.
you think that this is it?
Um,
U.S. has to change their policy for the on ramps to come
yeah,
back?
it's not about Asia. It's about the U.S. The Hong Kong narrative and Hong Kong adoption, I think, is widely overblown. It's is the U.S. The U.S. drives the world and drives the market. And it's not going to change. I think it's temporary, but we'll see. I mean, let's put it this way. It's, I mean, the ETF should make us believe that probabilistically this is temporary. We may be wrong, but that's quite likely the case. And crypto eventually is going to be very highly regulated. So that's kind of like the path forward for crypto. ETFs, regulation, up our butts. And yeah.
Oh, yeah, it's going to take a lot for DK. Did you have something to say? I know you're
Uh,
muted.
yeah, I was just gonna like I can see some pickup and some covering of the slack in some of the Asian markets, right? Like Singapore's coming a long way. Japan has been mostly pretty restricted, and they're starting to open up those regulations, a tiny bit. Korea's, I think, is going to be massive. I think that a lot of these cultures, even more so in Southeast Asia, is that there is like a high risk tolerance in a lot of these cultures, and they've maybe been kind of blocked from some of the markets that we've been involved in, but I could see them picking up some of that slack in the U.S.
Well, Korea's one thing that Korea's already massive, right? But what I try to say of picking up the slack is like countries that are big enough to matter there. The only one that is truly big enough to matter is mainland China. To compensate for the U.S. All the other ones on relative terms, they're really tiny. So China becoming crypto friendly, I really don't see it. It's not going to happen. It requires a systemic, deep-rooted change that I don't see it happening for the next 10 years.
Yeah, I mean, with the capital controls in place there, like they have no incentive to 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 reduce those restrictions.
I've sort
agree.
of looked at this too from like an internet relationship too. When you look at the 2000 period of the .com boom, and how the internet has progressed from a world in which it took you 10 minutes to download a single picture to now the days where essentially we can't deal without internet, right, in our daily lives. And even with the internet conversation as it's matured, still with like talking about China in particular, they still control the internet from their perspective, right? Like they control what is created or what e-commerce is done. But Alex, I'm curious, like, do you ever look at it instead of a monetary lens, from an indirect view of like essentially like what e-commerce was to the internet, where we didn't necessarily replace like brick and mortar, but there was this slow migration over to a different like system design, right? Like where the brick and mortar shops now, if they didn't have an e-commerce presence, like essentially they lost out on an entire different, marketplace. Do you not see that it's possible, or it could be possible, that crypto essentially is equivalent to the internet, and the different products that essentially get built, if they do have more real world use case, such as like, something that's being done that you don't even know that you're using DeFi, for example, or some decentralized system as like a settlement layer for some process that you're doing on the surface. Do you see that it's possible that that could be an angle in which, from a narrative standpoint, that could grab hold instead of this constant conversation of, depegging the dollar, as the reserve currency, which obviously is just like this David Goliath like narrative that just seems to constantly be around. But something tells me that the most obvious narrative that constantly is around is not likely the narrative that's going to end up winning. It's going to be something none of us have really talked about.
Now in that scenario, I think that most likely what would happen is value accrual would be value would mostly accrue to the applications and the websites and the companies that actually do that, basically leverage crypto to go after the masses, and the masses don't even know about it. It's not gonna be tokens, and a little bit of it will go to the layer ones powering it, but I think it's gonna happen. Like, let's say it would make sense for, say, 10% of the internet to basically run on to be decentralized, to run on some sort of layer one and have wallets and use smart contracts behind the scenes. It makes sense. It does make sense. A percentage, not all of it.
Sure, or just like the real use application, or maybe just even the narrative of I would prefer or I trust a decentralized application that for its transparency versus some centralized corporate entity that has, lobbying dollars that basically control policy, et cetera, et cetera. There could be essentially like an ethos-driven narrative in which, as long as the product is comparable to, say, a centralized corporate product, that you would pick the alternative, which would be the decentralized version of it, right? If they were just equal from like a product standpoint.
The question is, what percentage of people actually care about that? And it's not that many. I mean, people gives away their privacy to Google and to whoever they have without really checking. Like the guys that actually go and check the terms and conditions and the privacy policies and what you're giving up for the various benefits you receive is what, 1 in 100, 1 in 1,000. So it's a very, very small market, but then you have other people that basically follow without really knowing why they're following.
Yeah, so like on the corporate side, you do have to give your information, right? Where, say, in tradition or DeFi, there is an account that sort of masks your identity, right? Obviously, you can. There might be scenarios in which you have to provide KYC, but there is a certain level of privacy, and I do believe privacy is a very sensitive topic to a lot of people, and having your information stay private is important to a lot of people. And I imagine that me personally, for instance, I would prefer something that's private versus me giving you my address, my cell phone number, my social security number, right? So privacy would probably be one thing I would say is definitely superior than in the DeFi world right now.
I would say that for masses, though, like you're probably a minority. Like I said this before, like we're one Uber data breach away from like the next like Ashley Madison, right? Like the amount of data that someone like an Uber has, that everyone has Uber on their phone. Uber is always tracking where you are. Like there's so much that can get released in something like that. I don't think that most people care. That, I mean, we've given that up as a right now. Now it's more of a, if you breach privacy or you get breached and your data gets exposed, then you need to take the consequences of that, and you live and die by the sword. But I do think from a UX perspective, I agree with Alex that like most people probably won't care. Like maybe the fluidity and the ease of use it will be a benefit in the near term. Like I'm super bullish on Intense. I'm super bullish on account abstraction actually being implemented, and I think we're like 18 months away from like a full brokerage like experience in which that you couldn't tell if it was Robinhood or a crypto based product with the same rails. So I think that from a UX perspective, we're close.
Retail doesn't care.
Yeah, they don't care. Yeah.
Right? Like Google is so big because it's free. Well, it's only free because you give stuff up, and people don't even read the terms and conditions. It's probably like 1 in a million, right? Like nobody sits there and reads the whole thing, or even starts to tell themselves that they believe one thing that they're reading there, right? Or what they're giving up. I don't know. The Apple App Store did a little bit of like making it super easy, a little icon, and you're giving up this. But I don't think people care, right? Google's free. meeting sheets, documents, all that stuff is free. You just have to give up all of your life info, all of your calendar stuff, all your contacts, all of your private stuff. And yeah, one big hack, maybe you'll force people to more private things, but for the masses, for the billions of people like usability and they like free stuff. So they're always willing to give up something for free.
And I want to say something there, which is on the privacy. But it's a tough call because on one hand, there is very good reason for companies and handle money to basically do KYC and know exactly who they're dealing with. And we see it on DeFi on a daily basis. Basically, people cheating protocols, projects, and traders out of a fuck ton of money. And you don't know who they are, and you have a very hard time tracking them. And these people actually belong in jail. On the other hand, it's very convenient to not to have to do KYC because it just makes things faster. It's like an added burden that it in real life it takes too long. And on the other hand, then who are you trusting? Who are we trusting our information to? It's like oftentimes, most of the times, actually trusting personal information to tiny startups that may also be run by crooks, and that can get hacked, and all the information can get leaked. So the question is how to find that the sweet spot, balancing really necessary KYC requirements with actual privacy. I don't have the answer, unfortunately, but it's a gray. It's not a binary thing, right?
Agreed. All right, we got 5 minutes left. Do you want to open open it for questions, or what do you want to do, Marty?
Yeah, I would be amazed if Tony comes up and asks a question. My heart would be filled with joy. He's always a listener of the Marty Show. Does anybody else have a question that wants to come up? We'll leave it open for a few minutes. It could be for anybody on the panel, of course. We'll give it a few. But I wanted to say thank you for Alex and thank you for everybody else coming on. It was a good show.
I do. In the meantime, I'd like to add something. My strongest conviction is basically that if there is on a strongest conviction from a macro perspective is inflation is coming down. If there is a recession, which may happen, is going to be small, and that dip should be bought. So basically, if one has that view of inflation coming down and rates coming down, for whoever is looking at things long term, this is the time to basically put on positions that you can hold on. The question is how much, because if you put too much to work, then you can't handle the volatility, right? I'm a very strong conviction that the Ackman view of long rates going through the roof is wrong, and one should fade it. And crypto is going to be very noisy. Unfortunately, it's going to be very noisy. The question is again, it's more about I want to be long, and I'm long, and I want to be long into next year. The question is how to manage risk. It's more of a risk management story than anything else. In the meantime, how to survive until things change.
I like that. I like that a lot. Trevor, we got you live. Go ahead.
Hey, thank you for having me on. Just a quick question. I'm trying to kind of learn a little bit of options. Like, I guess I'm not really trying to learn. My buddy, financial advisor, is helping me. But I was just looking at veto options, like going out to June of 2025. I haven't really touched them or anything, but what are your thoughts on looking at those type of options now, or waiting, or whatever the case might be?
They're going to be wildly mispriced. I don't know to what side. So that's the only thing I can tell, is that anything out of 2025 in something as illiquid as BITO, or pretty much anything in crypto, is going to be wildly mispriced. So there is money to be made, but I haven't gone deeper than that.
Okay. I didn't know if maybe looking to maybe punt out in June of 2025 might be a solid idea. Thinking that volume will pick up eventually, and we'll see higher prices in 25. That's kind of what I was thinking, and just kind of wanted to hear your thoughts, or if maybe it was a dumb idea and to not try to look into it. So
No, if you're going to do any sort of directional betting, it should be a spread. If you're doing an outright call, of course not financial advice, right? But if you're doing an outright call, you're paying theta to somebody like Marty every single day, and you're going to be crying, and you need a huge underlying move to cash or to even break even, especially when you're looking that far out. You're going to get rinsed for sure unless you have some huge underlying move, and things are going to be mispriced, and maybe the volatility isn't priced in yet. Maybe we're at $1 million or whatever Balaji was saying, right? Like, of course we don't know, but yeah, doing any sort of directional, I would look at spreads or multi-leg options, so you pay less theta, or else you're going to get rinsed.
okay. So basically, just continue to watch and learn then for now, then, right?
Yeah, or if you have a long-term conviction, you can always go spot, right? No lev.
Yeah. I have a lot more spot, but I was trying to maybe cash in more by punting like some veto options, but to maybe cash in more on some higher prices, because I'm in the camp that we see maybe an all-time high in the next like 2 or 3 years. So
Aren't we all wishing? Aren't we all wishing? Trevor, we got to go to Ronan next. Ronan, you're live.
What's up, Alex? Given your kind of background with Argentina and stuff and growing up there, obviously, I was curious if you had any thoughts on like the presidential election, especially given like the rise of like Javier and this kind of like populism approach, and then like maybe some of the other candidates like Patricia Bullrich and such.
Yeah, of course. So the way I think about Milei, the guy who I think he's going to win actually the elections, is that he's a necessary evil. Why evil? Because he's going to bring a lot of chaos into the country, a lot of chaos, especially because he will have, assuming he wins, which again I think he will, he's going to have a very minority position in parliament. So he will have to establish deals with the opposition, and he's not the kind of person that does that. So he's quite likely to try to rule by referendums, basically asking the people what to do, and then trying to use popular power, popular support to push through the changes he wants to implement. So I think it's going to be extremely chaotic. I think he actually means it, that he wants to abolish the central bank. I think that's something he would do within a year to 2 years, not immediately, but not beyond that. I think abolishing the central bank is, in most cases in the world, would be an absolutely retarded move. However, for Argentina is justified, because Argentina, the way to think about it, it's a junkie, and the central bank is heroin, which means once you're a junkie, you're fucked. It's like you cannot be trusted with heroin. So once you're an addict to some drug, you simply cannot be trusted. That's Argentina. We have decades of history. So it's just the high odds scenario that we cannot change without an outside shock or a shock of this magnitude, meaning abolishing the central bank. There's a term in economics which is basically the poverty trap. The poverty trap is basically an economic state that countries may find themselves in from which they cannot escape without external help, or in this case, a major shock. That's what Milei may represent. So to cap it off, it's things, if he wins and he pushes through with the changes he wants to do, the country may literally implode. It may be an absolute disaster. But given how bad things are, I think it's worth the risk. And I personally, I support him, and I would personally support him even if he does a ton of fuck ups. I think it's worth it to support him because we need change. By the way, I don't live in Argentina. I worked in the government in the Ministry of Economics a bit over two decades ago. So I was in the government when the big major crisis happened in 2000 to 2002. But I'm still Argentinian. I go there all the time. I have business there. I have family there, so I care.
Appreciate it, Alex.
Yeah, anytime.
Yeah, what did they have to lose, right? I was there January for like a month, right? And all of the local Argentinians are all on their kind of on this. Like, it's so messed up, right? The rent goes up every month, your car payment goes up every month, the of your business, of your house, of everything, right? It's like, what do we have to lose? Let's just swing for anything different. Let's hit the reset button. So yeah, it's going to be an interesting develop to follow.
Yeah, I mean, it's the way to put it is the politicians, they you have to fuck them all up. This is where the countries reach a point where that's the way forward. It's kind of yeah.
It's going to be an interesting development. We got one more question from Lord Durden, and then we'll wrap it up.
Hey guys, hey Alex, that was a great podcast. There were some great bits of wisdom. Marty, I think you pushed quite a bit on ideology, and Alex, you answered all of the questions I was going to ask there. I remember you saying on your Twitter feed in the past, Alex, that you eventually see Bitcoin, going to a kind of 100K plus figure. You also said on this podcast now that you see crypto as just another asset class. It's not a revolutionary new standard in monetary policy. So is what you're saying synonymous with kind of looking at a world in which we have these competing complementary financial systems, both TradFi and DeFi? Do you see these as being able to work in tandem in the future and, not basically at friction with each other?
I like to say the word not binary. I repeat that a lot, and it applies in this case. I think that with the passing of time, DeFi and TradFi, they're going to mingle and become one. At the same time, on one end of the spectrum, there's going to remain a very small part of the market. It's going to be the black crypto market. Crypto is going to fracture entirely, and there's going to be one bit that is going to just be the dead end on its own. It's just going to be much smaller than I used to think. So yeah, it's on one hand we have the crypto black market doing its own thing with money trapped there that cannot leave. Like, by the way, that's one of the reasons why all this tether fat makes absolutely zero sense, is because people fails to take into account that a very large percentage of capital parked in tether cannot escape the system. It's trapped there. Therefore, tether is wildly over collateralized. It cannot crash. They always have the money to plug it, and when they plug it, they make money. So that being said, yeah, that's the way I see it. The black market on one side, and then on the other side, crypto progressively, with the passing of time, becoming one with the rest of traditional finance.
Great, thanks.
Yeah.
Okay, well, thank you, Alex. I think we used a little bit over the hour of your time. I know it was a weird time zone, 2 p.m. Pacific for the other folk listening in Europe. Big thank you to everybody. Appreciate you, Alex. Thank you, DK. Thank you, Tolga.
Thank you. See you in 2 weeks. Thanks, everybody.
Thanks, everyone. Thank
Ciao,
you very
ciao.
much. Ciao, ciao.